I'm sure you're familiar with ChatGPT at this point, but have you ever asked it for money advice? Well, that's what we're going to do today. I'm Brandon Galici, certified financial planner and founder of Galici Financial. Let's get started. We'll tailor this one specifically for millennials, so let's see what ChatGPT has to say is the most important question that we should be asking. What steps can I take to secure my financial future? Now, let's have ChatGPT answer its own question. All right, so this is what ChatGPT provided us with. So it's a lot of information here. So it gave us 10 ideas that we should work on. So let's go through these one by one and see how good the advice is. ChatGPT first tells us to start with a budget. No, this isn't a bad place to start. I will say I do recommend you shift your phrasing from the word budget to spending plan. And the reason for this is because oftentimes the word budget makes us feel overwhelmed and constrained and very limited, whereas a spending plan is exactly what it says. It's a plan on where we're going to spend our money. So that's one of the things. Also, a lot of times, whether you use spending plan or the word budget, we simply don't do it. It's like a diet. We have a hardcore diet for a couple weeks and a hardcore gym routine. But what happens, we get overwhelmed and we don't stick to it. So while it was great to track every single dollar and cent for the last 2 weeks, that ultimately doesn't lead to long-term success for a lot of people. So an easier recommendation to start you off would be to simply track your spending. So whether that's an app or a spreadsheet, whatever tool or system specifically makes the most sense for you, at least track the last several months worth of your expenses, because now that's going to provide you insight on where your money is going. Now that you have this information, you'll be able to figure out what areas you might want to cut back in. If there's any spending that's not aligned to your values, that is discretionary spending. For example, if you're not really a huge fan of coffee, but you notice that you're spending a lot of money on coffee on a recurring basis, and there's not a social reason for that or something of that nature, then maybe that's an area where you cut back in. But again, if something that you're very passionate about, so you are really passionate about coffee, just make sure that your spending is in fact aligned with your values. So not a bad start for ChatGPT. Secondly, ChatGPT recommends that you pay off your high interest debt. That's not a bad idea. It does specifically mention student loans, so that may or may not be high interest debt depending on your unique situation, whether you have a federal student loan or a private student loan and what the specific interest rate is. But something like a credit card that could have a 15, 20, or even 30% interest rate, that's going to be a great place to start to really knock out that debt if you're not paying off your credit cards at the end of every single month, which is what I recommend. And just for sake of example, even at a 25% interest rate and only a $1,000 balance on your credit card, say you carry that balance over the course of the year, you're going to pay approximately $250 in interest with just that $1,000 balance. Again, assuming you're not paying it off. So as you can see, as the numbers get larger and larger, that interest really adds up. And of course, it's not working in our favor. So the idea of paying off your high interest debt, definitely helpful to secure for your financial future. ChatGPT says to build an emergency fund, and I would 100% agree. So the rule of thumb, which ChatGPT mentions here, is having between 3 and 6 months worth of living expenses in an emergency fund. And I like to take it a step further. I want to make sure that that emergency fund is also in a separate bank account. So instead of having, say, for example, one checking account and one savings account, I would recommend you have two savings accounts and have one of those be specifically set aside for emergencies, because then we are physically but also mentally separating those accounts. So if and when we need new tires or brakes on our car, we know exactly where that money is going to come from because we've already set it aside in what we've named an emergency funds account. Another way that I like to look at this, instead of just saying between 3 and 6 months worth of living expenses, is I like for you to calculate your liquid term score. That's something that I'm calculating for all of my clients with the Elements Financial Monitoring tool. It's an invitation-only app. It's pretty sweet. But what it does is it helps calculate this liquid term score by adding up all of your cash plus your after-tax investments. So those are things like your brokerage account. So if you have a Robinhood account, that will be included here. And then you divide that by your annual spending. So a 0.25 or a 0.5 liquid term score would suggest that you have between 3 and 6 months worth of living expenses. And it just really breaks things down, I think, in a very simple and easy to understand way. So have an emergency fund is what ChatGPT recommends. I recommend that as well. Number four, ChatGPT suggests that you start saving for retirement and that you do so early. Pretty solid advice. It specifically mentions an IRA or an individual retirement account, as well as your employer retirement account, something like your 401k or your 403b, and specifically mentions taking advantage of the employer match. Ultimately, this is pretty good advice because as millennials, we are younger and therefore we simply have more time for our investments and for our savings to grow over the long term and to really take advantage of compound interest. Number five, ChatGPT says that you should invest for the long term. I like this one as well. Bringing things back to that liquid term score that we were talking about earlier, since brokerage accounts or after tax investments also count in that liquid term score, I'm a fan of investing or potentially investing in brokerage accounts above and beyond the 6 months worth of living expenses that you have. And one of the reasons for this is because we're able to invest in a long term manner through brokerage accounts, depending on the specific types of investments. Make sure you talk to your investment professional before making any of those types of decisions. But also, we do have more access to them. So, for example, if you plan to retire early before the age of 59 and a half, or you just want to have a little bit more flexibility where you take a 3 month sabbatical in between jobs, over the next 5 or 10 years, or you want the option to do that, something like a brokerage account and investing it for the long term could be a big benefit if you have more than 5 to 7 years. But again, if something were to happen prior to that, you're still going to have access to that money versus all of your money being locked up in tax preferred accounts where you can't really access that money until the age of 59 and a half. So again, investing for the long term, and I'll even add specifically in a brokerage account, could absolutely make sense depending on your specific situation. Number six, ChatGPT tells you to diversify your investments. I certainly agree with this one. We don't want to be putting all of our eggs in one basket, so not really much else to say here other than diversify your investments. Number seven, ChatGPT says to continuously educate yourself. I think you're in favor of this one as well because clearly you're watching this video right now with the hopes of doing that exact same thing. So big fan of this one. Just be mindful of who you're following, the kind of content that you're consuming, that it is a reputable source and they do have the expertise in whatever area or strategy they're specifically presenting. Number eight, ChatGPT says consider adding additional income streams. So this is good advice, but I will warn you, if you're not passionate about the thing that you're doing on the side, it's probably not going to be very sustainable for the long term. But if you are really excited about the thing that you're doing, then I think it could absolutely make sense. And who knows, maybe turn it into a full-time gig in the future. Number nine, ChatGPT suggests that you protect yourself with insurance. And it specifically mentions a couple different types: health, disability, life, and property. I think health is incredibly important. Even if we're super healthy, God forbid we do need an ambulance ride or something like that, we want to make sure that we have health insurance in place so we're not stuck with that bill. Disability, that's not talked about very often either. I mean, you've seen the Aflac commercials. They talk about it a little bit. There's a chance that you have some through your current employer if you're not a business owner or entrepreneur, but this is something that's not really talked a lot about, but many families could potentially benefit from. And the reason being, there's a higher likelihood that you use your disability insurance, something happens to you, there's an illness that puts you out of work for months to years. And income for millennials is often one of the greatest assets, and future income is one of the greatest assets. So being able to protect that with disability insurance would at least, I would at least recommend having a conversation about that. So with then life insurance, you see a lot of information out there on this. I'm a fan for most millennials using term life insurance, meaning that you have term coverage for a specified period of time, usually gets you to 60 to 65 years old. Ish. Again, each situation is going to be different. But the reason that I recommend this for most people is because cash flow is partly a priority, at least. And this is the most cost-effective way to make sure that your family would be covered if something were to happen to you. Now you'll see a lot out there on cash value insurance. Again, depending on the particular situation, it might make sense. But again, you just have to be mindful of the things that are most important to you. I'm a fan of let's make sure that insurance is insurance. And if you've got, gajillions of dollars of extra cash flow every single year, okay, maybe start to explore some cash value after a lot of other things are happening. But oftentimes a term life insurance policy could make a lot of sense for you and your family. Number 10, seek professional advice. Shout out to ChatGPT for this one, because of course we know that there's no shortage of information out there, but then the next step is the toughest one. How do we apply it to our unique circumstances? How do we take this piece of advice or this strategy and apply it to what we need to do? And then also feel the confidence to take then that next step, because information and knowledge is incredibly useful, but if we're not implementing any of the strategies or taking that next actionable step with our money, then it's not as valuable. Because I often find that when working with clients, a lot of my clients have a very good understanding of money and how finance works and enjoy researching different topics online. But then we get to have an awesome collaborative conversation on, okay, well, how do these pieces of advice specifically make sense for your situation, run through your values and what's important to you? So then you can feel confident to take that next step as we continuously collaborate and then also monitor the situation over time to then uncover different strategies and ideas as your life changes. Overall, pretty solid responses from ChatGPT. Of course, still the limitation is going to be its general advice and not personalized to your unique situation. If you're interested in something that's more tailored to your unique situation, click the video on the screen to see how a free financial assessment could give you the clarity and the confidence you need to take the next step with your money.